Does the new non-borrowing spouse policy throw a wrench into the gears of the HECM program? Welcome to this week's edition of the Industry Leader Update by Reverse Focus. What may have gone unnoticed by some may in fact turn out to be one of the most momentous policy decisions in the history of the HECM program, the non-borrowing spouse provision. Recently, columnist Jack Gutentag, aka the mortgage professor, pinned a column on HUD's new non-borrowing spouse policy and what he sees as the resulting wrench the policy will throw into the gears of the home equity conversion mortgage program. Gutentag writes in part, effective August 4th, more sand will be thrown into the HECM gears thanks to a misguided lawsuit by AARP against the Department of Housing and Urban Development and a misguided change in HECM rules by HUD in response to the suit. But first, some context. Prior to the policy, HECM borrowers with a younger spouse often removed the younger spouse from title, even if they were 62 or older or not. Now, some even removed a spouse who was eligible, 62 plus, in an ill-advised attempt to benefit from larger proceeds based solely on one borrower's age. Gutentag states that there is little credibility that seniors who removed a younger spouse from title that did so without being aware of the risks and consequences and the loss of tenure in the home. Tenure, not tenure payments, but tenure in the home itself. Now, while the new policy gives us the silver lining in providing security for younger spouses to remain in the home, it also has a more ominous yet overlooked consequence. While the younger non-borrowing spouse would have tenure rights to remain in the home, much like what we call a life estate, they would no longer have access to tenure payments once the sole borrower passes away. Yes, proceeds, whether a line of credit or tenure payments, do cease upon the death of the sole borrower. A borrower who may be terminally ill or who is in failing health could conceivably cash out an open line of credit or even convert a tenure payment into a lump sum, securing proceeds prior to their death. But what does happen when there is an unexpected death? For our senior borrowers, this is not an uncommon occurrence. In such cases where proceeds are not strategically accessed, the surviving spouse may have a right to remain in the home, but may be unable to afford the ongoing property obligations or living expenses. To be fair, one could argue HUD engineered this payout restriction, seeing the HECM program being unable to afford tenure payments for younger non-borrowing spouses. Also, technically, only the true borrower on the HECM note is entitled to the full benefits of the loan, including payouts. Now, what are your thoughts? Has HUD thrown a wrench into the gears of the HECM program with this new policy? And what solution would you propose? Leave your thoughts in the comment section below and have a great week.